What's up, guys? This is Mr. 1% coming at you live here with my 3X trading. We are going to talk about a position that we currently have in CrowdStrike. I'm going to go ahead and share a chart with you first, and then I'm going to show you how I write these things up and I take a look at it. Obviously, we have been seeing a nice progression to the downside in CrowdStrike. Like everything in the tech sector, it's getting hit. We have pretty nice trend lines to the downside developing. And obviously, it is approaching a time, in my opinion, where it is maybe a good opportunity for us to consider buying stocks, CrowdStrike being one of those holdings that I regretted not taking off of its COVID lows, which were, if memory serves, I'm looking at the chart right now, which, I mean, geez, I mean, $33 and change. You can only imagine that's a pretty significant gain, even if you had not sold at the top and you're currently in the position. However, I don't know where the bottom might come in for this. So what we do to kind of not be, not miss out, but more importantly, take advantage and maybe pad our cost basis while this is falling. And what we did is we measured some time frames of how long it took and what strike prices we would need to sell in order to find a safe entry to CrowdStrike. So what we did is we entered a 125 cash secured put for the month of January. And what I'm going to do is I'm going to switch my screens right now. I'm going to show you how I write that up. And I keep a file on this. So the issue is CrowdStrike. The symbol is CRWD. We do not have a dividend. Our opening transaction was a sell to open 125. Let's probably put a P next to that so we don't get confused. 125 put for the monthly expiration at a credit of $8.25. Obviously, we see that credit of $8.25. Assignment cost is $1.25. That's our strike price minus our credit, which gives us a break even of 116.75. So if we just keep that in mind and we go back to our chart, we can see that that area of 116.75, and this is close enough, has not been breached in the last year. Matter of fact, our 52-week low is 120.50. So we are comfortably away from those 52-week lows. We've seen a little bit of a bounce here. We're getting slight bullishness, maybe a retest of this trend line, which would be perfect for us because it would allow us to possibly roll out of these cash secured puts multiple times and start to bank even more credit and premium. So when it is time to buy the stock, we're buying the stock at a huge advantage. And we can obviously see bigger profits by lowering our cost basis. So keeping that in mind, let's keep going on this. So what we want to see is a hold above 117. I'm going to call this a moderate risk cash secured put. Its current profit is $264.94. It's bidding 690 by 720. So we are in profits right now. We have a couple of corresponding issues that are going to present themselves this week for us maybe to take some profits and just kind of get to the sidelines a little bit. FOMC, how is the cloud security companies held up during earnings? They have an earnings report coming out. And do we have past profits in CrowdStrike this year? And the answer to that question is yes. So we are going to keep this position through that time frame. We are not going to take profits. But let's talk about the obligations and what I think a lot of people get confused with regards to cash secured puts. First and foremost, forget the fancy terminology that's below this. The obligation realistically is 100 shares at $125 a share for a financial commitment of $12,500, which we received $825 up front, okay, for a cost basis of 116.75. Now, keeping that in mind, what type of return in that is that? It's only about 5%, and that is the most we can make from this position. We cannot make any more than that unless, of course, we reposition our options or we turn it into a spread or we utilize the fact that we are in the position and paying attention to what the stock is doing. Maybe we use this as a barometer for other plays to again bring in premiums to lower our cost basis. So the way that I kind of differentiate this between what we should do as investors and what we should do from a risk management standpoint is twofold. Number one, what is our max financial commitment? Our max financial commitment is $12,500. The max loss is $12,500. Why? Because CrowdStrike can only go down to zero. So that's as far as it can go. So it is a limited risk proposition. If the max return on this position is $825, 5% on an options play is not typically something that's attractive. People see that and it's like, well, you know, I could have just bought calls today when CrowdStrike is at 133. Now it's at 139. I would have made 300%. I wouldn't have had to risk $12,500. All of that is true. Okay, I'm not going to debate that or get into the politics of it. This strategy, the cash secured put, is a long-term strategy. The reason why I'm approaching CrowdStrike like this is because not only, and I did, as a matter of fact, play CrowdStrike today. That's why I said, you know, do we have any past profits? Yes. So you can also continuously play if you have the funds to do so. Here's a point of fact. If you do not have the $12,500 and then some, I would not be looking at this position if I was in your shoes. I do have the portfolio to obviously take these positions, and we're going to go into how I take these positions and how I kind of view it. Even though I know my obligation is $12,500, I'm looking at a max return on 100 shares, 825 per 100 shares, but my margin requirement is 35%. Which means that I have to put up $4,375 in equity to be able to write this put. That is about 18%. That is about 18%. Oh, we have, whoops, that we have received for that. And I kind of base things on that, rather than basing it on the actual number of $12,500. I understand that that's my obligation, yes, and I'm fully prepared to take possession of those shares should they be assigned. There are a couple of strategies that we can do to obviously maneuver that, and we're going to mark the date and time. I'm going to save this recording, and we're actually going to watch how this plays out. Win or lose, we're going to take the next couple of months, because this is a January expiration. We're going to take the next couple of months and use a time delay on this presentation. This is part one. You guys can follow along at home. Go ahead and take notes if you want to take a snapshot of this page. We know what what we're into. We have a good picture here. You can go ahead and snap the chart too if you'd like. We'll go ahead and take our chart here. Share it once again. All right, so we are looking to remain south of this grouping of lines right here, maybe a little bit higher than this 111.28 that I have here, which I put as a old resistance zone. I'd like, if we're going to keep going lower, I'd like to see it at least hold that level. So I am getting somewhat in the middle of this level and this level. I'm trying to stay as close to the price action as possible, staying about 90 days or less on the option. And then our protocols are very simple. And there's a reason why I write this out. And let's go over it again. What we did is we went into CrowdStrike, sell the open 125, 123 puts for $8.25 credit, giving us a break even at assignment of 116.75. We want to hold above 117 to remain profitable no matter what. Our max obligation is $12,500. That is the maximum amount of money that we can lose. Our margin requirement is 35%. Or a commitment of $4,375 off of our cash balance, which is essentially 18% difference for the credit that we are receiving. So we are making a decent return, regardless of the fact that our max obligation, or you can even call it max pain, is $12,500. That's actually not the correct way to utilize that phrase, but since everybody just gets everything wrong anyway, we'll just go ahead and run with it. All right, guys, that's part one of this. I hope you enjoyed it. We'll see you guys shortly.